Hello everyone, I'm Mark Sain and welcome to Sain Investment Solutions. Please take a moment to pause this video and review the following disclaimer. Thank you for that. Welcome to week 13 of the Forex market review. Today we're going to look at a couple pairs which are setting up, as well as quite a number of British pound pairs, because the PM or the UK Prime Minister has signed the exit agreement. So that document was officially signed a number of hours ago, and you'll probably notice that the pound has fallen significantly based on that announcement. So let's have a look which way we think the market may go. But before we look at some pound pairs, let's look first at the USO USD. So here we have the oil chart, and what we can see on a daily time frame is that the price stagnated up here for a while and then it started to push down. We looked at a selling opportunity at this DSR zone up here and we exited down there, and we looked at that it may find some support around this daily 200 EMA line. As we can see, it's come down, pushed through, tried to push back up again, it's bouncing around here, and it's starting to find some support around this one and this DSR zone. We then drop down to our 4-hour chart, and what we want to see is our divergence, where we have our lower low in price and our higher AO, and clear divergence where the AO has come back above the zero line. So this horizontal middle line through here is the zero line. So when it's gone back above and then back down below with that higher AO, that's our clear AO divergence. Now that we have that, we can drop down to the 1-hour chart. We can see what looks like we may have a wave 1, down for 2, and going up for 3. So we really want to see this large AO maybe push a lot higher before it has a bit of a pullback. And if it does, hopefully we could see it push up to these levels and then come back and retrace for an entry somewhere around this 1-hour 200 EMA line, and then we can look for another move back up higher. How far do we think it's going to move? Well, once we identify the end of wave 3, and that's after this AO comes back to the zero line. Now, if we see this pull all the way down to these levels down here, then we're going to look and assume that this is now 1, down for 2, and this was just the ABC. 1, 2, 3. So really, it's a touchy corner at the moment, but if we get an entry signal, we will look at taking this long and definitely making our 1 for 2. The pound Aussie we're looking at last week of a setup. We saw it come down, test these support areas on the daily time frame, and now it started to push back higher. Now the pound was going up, not on much news. There was some good news coming through for retail sales, which started to help it, but it's mainly the Aussie dollar which was driving this, the Aussie weakening, which made this pound against the Aussie strengthen a lot quicker than some other pound pairs. We then wanted to see our divergence, where we have our lower low in price and our higher AO, and we saw that with it all stepping downwards and the AO stepping up. We then have our 1, 2, 3, it's coming back for 4 on the 4-hour chart, and on the 1-hour chart we want to see a large move up. Here's our large AO, come back below the zero line, there's a pullback. The pullback never came back to our minimum 38.2, so unfortunately we couldn't have taken a position here. It didn't even come to the 23.6 before pushing higher and giving our 1-hour divergence. So now what we're looking at is taking this move based on the 4-hour. So this whole 4-hour move, we've seen it come back. We've now seen it fall below the 4-hour 200 EMA line. So that's going to be a bit of a question mark which way it may go. With that Brexit announcement, with the UK Prime Minister signing the exit out of with the European Union, we could see further weakness on the pound. So this is a caution trade. It is setting up. We do have the AO back to the zero line. We do have the stochastic now oversold. And on the 1 hour chart, we don't have our divergence, but if we can see possibly a push higher, we might be able to take a trade, probably doing a really tight stop loss, maybe risking 100 pips to go for 200 pips. And you definitely want to get out before up these levels up here. So if you can get a 1 for 2, we'll probably see a pull back and then maybe a push down lower. So just be cautious on this pound Aussie. Now that that document has been signed, this long trade may not evaluate as good as it would have prior. The New Zealand Euro New Zealand trade we're looking at. So what we can see some resistance happening. So if I go ahead and drop in this DSR zone around about here, we'll drop down the 4 hour chart. Here we're looking at a butterfly pattern. So we go from X to A to B, and then we go from B to C and C to D. Now, how far do we think it's going to go? Well, what we do is we use our Fibonacci tool, and we can see it should pull back to about the 127 mark. So based on that, we probably could see it come up and test this area here. So until it comes back to there, it almost got there with that candle there, but until it gets up to this level up here, we don't want to look at taking a selling opportunity. So really want to see a bit more weakness, and hopefully this daily stochastic comes back into the overbought section, and then that will give us our indication to look at taking this butterfly pattern lower. So risking 1 to make 1 to 2, roughly down to these levels somewhere down here. The other two pairs we're looking at is the Euro Pound and the Pound Caddy. So both are pound related, Euro being in a long position because the pound is weakening, so the Euro is strengthening, and the pound is weakening here, so that's why we're looking for a shorting position. And the strength in the Canadian dollar is also shown because we're looking for the strength in the oil. So Canada is largely affected by oil, so as we've got oil showing us it's going higher, that's going to also push this pound lower as well as the Canadian dollar gets stronger. Looking at the 4 hour chart, unfortunately we don't have any divergence on the lower time frame, so you're going to take a very tight stop loss on this one. Here we have wave 1 down for wave 2, up for wave 3. So once that comes back to the zero line, we'll say this is the highest point. This has come all the way back to zero line. We want to see that pull back to the minimum 38.2. Hopefully it comes back and tests this 1 hour 200 EMA line. So I'd be liking it more if it came back to the 50% mark, came and bounced off of the 1 hour 200 EMA line or pretty close to it, and then looked at a tight stop loss of maybe 50 pips, and trying to definitely bring it to break even before these highs and getting out at these highs for a 1 for 2. On the pound, same, we don't have any AO divergence on the 4 hour chart. So what we want to see is 1, 2, 3. We can see that it's found some support off this 1 hour. It's broken through, bounced along, broken through. If we can see it come back and retest this, we want to see it come to the minimum 38.2. So probably around about these two zones here, in between the 38.2 and the 50% mark would be a good area. And again, probably looking at maybe a 75 pip stop loss, and definitely bring it to break even, maybe even making your 1 for 2 before the lows. If not, definitely look at this DSR zone here for a possible exit, and if you need to, this one down here. But personally, if you can make a 1 for 2 before these lows or just past these lows somewhere down here, then that's what you would want to be aiming for. So thank you for that. That was a quick video today. Not much really happening, just the Brexit announcement. That's probably the only thing that's happening at the moment. So the pound pairs are going to be the most vulnerable. So just be cautious with those. They will definitely move quickly, but if the trade meets your criteria, then to go ahead and take those trades. Here at Sane Investment Solutions, we wish you all the best in your success. Take care. Bye-bye.